Alright folks, welcome to the new video of our CRT playlist from basic to advanced. So this video will be about the external range liquidity to internal range liquidity. This video is for the buyers, okay? That's for the buyers simply. So now, the next thing, I have shared one video already about the bias in my previous video, which is the mechanical way to find the bias, the easy way. But in today's video, this method is bit hard, but this method is also very important and more accurate than that method. Okay, so this method is composed of IRL to ERL and ERL to IRL simply. Okay. So now IRL stands for internal range liquidity and ERL stands for external range liquidity. Now what's mean by that? Internal range liquidity is simply the PD arrays. Okay. All the PD arrays in a leg. For example, if we have like this a bullish leg, so for example, if we have order block, FVG, BPR, breakout block, anything here in this leg, these all are our internal range liquidity. So what is external range liquidity? External range liquidity is the liquidity which is resting above or below the high or swing low or swing high. Okay. So these always are our internal liquidity, and these highs and these lows are our external liquidity. So let me tell you one thing, that price always tend to move from internal liquidity to external liquidity to internal liquidity. For example, if I have bullish leg here, okay, price has stepped into, for example, an FEG here, and we have here and for our fair value gap also. The price will come here for the internal liquidity, okay, for what? For internal liquidity, and then price will go up for the external liquidity. Then price will come again to the external internal liquidity, then go up for the external liquidity. Then it will come again for the internal liquidity, and then it will go for the external liquidity simply. So this is our external to internal model. Same for the bearish model. Okay, fair value gap, internal, then external, yeah, then internal, then external. Simply, this is our what? This is our external liquidity to internal liquidity. Okay. So now, how will we find our bias with this method? Let me shift chart to the NASDAQ, okay, to show you how it works or this pen. Okay. Now here, let me show you. For example, if I have to say you, first of all, we will come to the daily time frame. What for the daily time frame? Okay. So after the daily time frame, when you come to the daily time frame, we will see our uh, market structure. Market structure. So first of all, you have shifted to the daily time frame. Yeah, and you saw the structure. That, for example, if we have this like a bearish structure, so here you can see price is been breaking the bullish PDRS and respecting the bearish PDRS. Okay, and also here, okay, respecting bearish and breaking the bullish PDRS. So now what's let me tell you what's next. Then after seeing the one on daily, for the daily time frame, you will shift to the 4 hour, to the 4 hour time frame. Okay. Forest time, in the forest time frame, you will mark your latest dealing range. Okay, latest dealing range. Okay, so now what is dealing range? Dealing range is simply a leg, okay, a bullish and a bearish leg. Simply this is about dealing range. You will mark your dealing range or a leg, okay, on the 4-hour time frame. So now after shifted to the 4-hour time frame, if you are playing CRTs on the 4-hour time frame, then you will mark your dealing range on the 4-hour time frame. If you are trading on the 1-hour time frame, the CRTs on the one hour time frame, then you will mark your dealing range on the 1-hour time frame. Okay. Then you will shift to the time frame where you want to play CRT. For example, if I want to play CRT on the 1H time frame, okay. So on 1H time frame, I will mark my fifth tool. After that, I will mark my key levels. Okay, the key levels. Yes, for key levels in the um, beneath the 0.5 level or above the 0.5 level for the buying and selling. Okay, so for example, if I am looking for the buyer's opportunity, I will always focus on the key levels below the 0.5 level. Okay, if I am going for sell, then what will I do? I will wait for the price to come above the 0.5 level, and I will select the PDRS above the 0.5 level, and when market tapped, I will take the CRT to the downside. Okay, so this is your external line liquidity to internal line liquidity. Okay, checklist for this model. Okay, and now let me show you the real examples. For example, now what will I do? I will shift to the one daily time frame. Okay, let me remove all the stuff. You know. Okay, so now you can see here. Previously, we have created the market maker model, which is like this: accumulation, and then manipulation, and then distribution. Simply, okay, we got the V-shape recovery to the upside. So yes, I am bullish for this for the market in these days. Okay, now what will I do? I will shift to the 4-hour time frame. I will mark my latest dealing range. Okay, for example, for today, sorry, let me show you. For example, I will draw my fifth tool from here to the high of this. Okay, so now you can see here we have fair value gap, bunch of fair value gaps here. Also one here. Okay, and also we have got one fair value gap in this area. Okay, so you seen that price is disrespecting this fair value gap. So if you took the fair key levels above the 0.5 level, you are going to be cooked. What will I do? I will just mark the key levels below the 0.5 level. I have this fair value gap. Okay, this fair value gap is a key level, and this order block is a key level. Simply, okay. So now you can see here we have a breaker block merged with the key level. Okay, merged with the uh, fair value gap. I will take this area for my key level. When the price reaches here at my this level, I will take this as my key level, and I will take the buy entries for the CRT and boom. Okay, so now let me show you another examples. Okay, this is so easy. Okay, don't make it so hard for you. For example, you can see here we are bullish in the all scenario. Okay, we are bullish in the all scenario. Yeah, for these days you are bearish. Sorry. So now I shifted to the 4-hour time frame. Now what will I do? I will wait for the price to create the latest dealing range. So now you can see here, I will drag my wave from here to here. Okay, so now I will just take the key levels above the 0.5 level. Okay, so here you have got this BPR, which is already balanced. Okay, if you don't know the BPR, let me know in the comments, so I will make a video about this also. This is balanced already, so I will refine my key level and take this is my key level. Okay, so now in this scenario you can see here we have this this candle range high. Okay, candle range high, and this candle range low. Okay, but let me show you one thing more. You can see here price has created this swing high, and now it will tend to move to the internal range liquidity from the external. So now this is our internal range liquidity. Okay, so I can also target this is my, I can achieve this is my target. So this is 4 hour time frame. I will shift to the 5 minute time frame or 15 minute. I will suggest you a 15 minute for beginner to play it in a CIT. Okay, so now you can see here we got a clean TBS here. Okay, a clean TBS with all the rules following. Okay, clean TBS here. Okay, and clean model one here. Okay, example. This is just an example. So take it as an example. Don't find the mistakes. Yeah. This is your perfect example of how to place CRT with the internal range liquidity to the external range liquidity. Let me show you also in the gold. So first of all, you come to the daily time frame. On the daily time frame, you can see here lately we have created the market maker model. Okay. Not yet, but yes. For example, we are respecting the bearish PDRS and disrespecting the bearish PDRS. So we are bearish in the daily time frame. So what will I do? I will shift to the 4 hour time. So for the 4 hour time frame, I will mark my dealing range, latest dealing range. Okay. So now this is our dealing range. Okay. So so I will take only and only key levels above the 0.5. So you can see here this key level is already what mitigated. Mitigated. Let me show you. For example, so this is my order block. Okay, this is what this is my order block. Okay, as a key level. So this is my candle range high. You can see here clearly candle range high. It is so easy, guys. Don't make it complicated for you. This is so easy. CRT is so easy as compared to the other strategies. Once you mastered it and understand the game of the CRT and know how to mark the CRT candle properly, believe me, your whole trading life will be changed. Believe me. So now I will go to my chart. Okay, so we are arrived in this. Yeah. You can see here we have got the candle TBS properly. TBS, I think. Yeah. Sorry. Yeah. We have TBS here, and we have a clean model one here. A candle with a thick body. Okay. The model one is simply as candle closes below this, take your entry on the retest or the candle closure. It's up to you. Example, you have trade on the retest, put your SL to above this high, or you can also put your SL above this order block candle. which I have taken as a model one. So now they will take you to the candle line low. This was my candle line low. Okay, you can also target this 1:6, and you can also target the 4 hour fair value gap, which is internal liquidity. So now here you have got 8 hours. So this was a pretty simple method to find the bias and trade with the bias and trade a CRT with ERL to IRL, which is the perfect model I have ever seen in my life. Believe me, practice this, okay? Practice this method about 100 times, then you will come to know properly how to use it and how to trade it. Okay. It was enough for today, guys. See you all in the next video. Goodbye.